In this video, we're going to talk about the stock market correction that's happening right here, right now. And I'm going to show you how I'm dealing with it, still making money in this falling stock market. Stick around. I know you're going to like this one.
Let me show you my eyes.
Hey, welcome back, everyone. It is time for another red-hot covered call video. Well, hey, look, today we're not talking so much covered calls. We're talking the overall stock market and how it is absolutely getting slammed. And I know many of you, just like me, are feeling the absolute pain that Wall Street can bring in the matter of days. In this past week, we have had 3 days for which the Dow was down some 1,000 points. Just like I've always told you, man, the numbers are so big now, we're seeing 1,000-point down days. And don't be surprised if we see some real dead cat bounces for which we get 1,000-point up days. Remember what I told you. We want to make sure we look at these things from a percentage standpoint. We have been conditioned over the years that a 100-point up day is a good day in the Dow. Well, those days are over. The Dow Jones was trading damn near 30,000, so it fell just a mere 3% on Monday, and the headlines look like people were panicking and jumping, if you know what I mean. But look, we're going to bring it down a little bit. We're going to get a little calm here. We're going to talk about a couple things. I'm going to show you how I'm handling this stock market, give you a little insight and feel as to how I look at these things. Maybe it'll up your game. Maybe it'll add value to your investing and trading life. So let's go ahead and get to this. Look, if you like what you're hearing today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're looking to do is this. I'm going to be sending out my free covered call cash secure put newsletter. The video is timely. I did a video on how we use the cash secure put during volatile times. So I'll tell you, that is one you want to watch. So I want you to go over to ctpdashboard.com, click on the free newsletter link and sign up. You don't want to miss that because that is a great video of how we use the cash secure put. Now what we're going to do here is I'm going to show you what I've done this week, and quite frankly, for some of you, you may not use the ETFs that I use. But what I want you to understand is this. We're talking about market volatility. You can do this with stocks. You can do this with ETFs. Now, I use the leveraged ETFs when I'm looking to create that quick cash using a cash secured put, right? I call it my cherry picking cash secured put profits. And what I'm going to use is that volatility in the stock market. And we got that volatility this week, right? The markets are selling off. We're in correction mode. So I'm going to use this opportunity as that downward volatility is happening. Man, we're getting some huge premiums on the sell side. So I use the cash secure put, hoping that I pick the right strike prices at the right support levels so the stock or ETF can rally higher. I keep the premiums. I never get assigned the shares. I call it my quick cash printing machine using the cash secure put. Now, before we get going, I want to remind everybody, head over to the upgraded CTP dashboard and check it out. Look, it's time to up your game. If you're not a part of what we're doing at the upgraded CTP dashboard, I want you to think about it. Look at everything you get, man. I know you're putting real skin in the game. And if you go there right now and you click that down arrow, your special offer's right there. And if you're still wondering what we're doing at the upgraded CTP dashboard, just check it out. You get 4 screener dashboards for ETFs, dividends, closed-end funds, and of course that list of the 100 best stocks trading now. And hey, look, because you're putting real skin in the game, I try to up your game with all my real-time trades, my chart of the week, and I love doing my chart breakdown video. I'll tell you, so many things coming to the upgraded CTP dashboard to up your game. Check it out after this video and see the free offer that's waiting for you. What I want to do is really impress upon those out there that are having a really tough time right now in the stock market, right? I'm getting emails where guys are down 20 and 30% and they don't know what to do. You know, at the end of the day, you're either comfortable with this or you're not. That's why I always tell you, get your financial education, get your experience so you do feel comfortable with this, right? When you feel more comfortable, you're able to handle it. And handling it emotionally is key. I always tell you, man, this is about success. This is not necessarily about the money. It's about having success. And when we have success, we're able to handle our emotions, right? Because if we can't sleep right now, if we have anxiety, see, that ain't helping nobody, okay? So getting your financial education, getting your experience is the key. You do it once, you do it twice, you feel more comfortable with it, and times like this won't affect you. With that said, some of us find ourselves 20 and 30% down. What I hope is that you're buying great companies that you want to own. See, that's the key. When we sell premium, whether it be write a covered call or sell a cash secure put, we have to understand that we want to own the underlying equity. If I'm going to write a covered call, man, I better want to own the stock, because as you could see in a week, the Dow is absolutely getting kicked. Most stocks are clobbered. We're left holding the bag on some stocks that might be down 20 and 30%. And you're not going to be able to sell premium in the short term that's going to make up for that loss. And of course, if you were to write a covered call right here, right now, and you're down some 20 and 30%, well, you might have your shares taken away, you end up losing on the trade, or you're going to have to do more work than you really intended. So what we want to do here is make great decisions, right? I say this all the time, man. I'm a broken record on this. We want to adhere to the golden rules of covered call writing, where we're buying great stocks. They pay us a dividend, right? We want to own the stock. All these things help us in these times of the stock market correcting. See, all the stocks I own right now, I want to own them. I understand that they're going to fall, and I'm going to hold them. I don't lose sleep at night when I'm holding Chevron, yet Chevron is down some 10 to 20 points from where I bought some of my shares. But I don't fret it, because I'm going to hold Chevron for the long term. Yes, I may write a covered call on Chevron, and yes, I might use some short-term calls and maybe some short-term puts, but at the end of the day, I'm ready for the long haul, owning Chevron. And that's really where we need to be, okay? Because you don't want to be owning stocks in a falling stock market that you don't want to own. I always want to be in that position where when I'm sitting down explaining to my wife why we own a stock or why we're in a bad investment, right? I can tell her why we're in it and why I bought it. Now, before I get to that cash secure put trade, what I want to do is I'm also going to give you some ideas about buying stocks during this falling stock market, okay? It's very important to understand why the stock market is selling off right now. If you're watching the media and social media, there's a lot of misleading information. What we have happening right now in the stock market is this. We have uncertainty. And what have I always told you about Wall Street and uncertainty? That's when Wall Street takes their profits in pennies, and they don't care. Ever since 2018, man, they will sell it off, take their profits, and come back the very next day. It is about uncertainty right now. Because look, the coronavirus has been around since last year, okay? Only now is Wall Street stepping up and taking profits because they see the uncertainty on the business side of this virus. Right? It isn't necessarily about people getting sick and dying. It's about real supply chains being disrupted. And when you have real supply chains being disrupted and people not going to work, man, your profits are going to be affected, right? So these companies are going to start adjusting their numbers. They're not going to be making as much money. Well, Wall Street is absolutely going to sell off because that's uncertainty. And hey, they'll sell it down to that traditional 10%, 12% correction, right? They've run this thing up to Dow 30,000. They have now peeled it back to Dow 24, 25,000. Those are support numbers, and they're going to buy it up. And in fact, on Friday, the market was down some 880 points, and in the last 30 minutes, they rallied it up to where it was only down some 300 points. Look, there are buyers here, and you just have to understand that, okay? It is about making money on Wall Street, and to be damned with all the other. And that's how I feel. So for me, I'm going to see these corrections as opportunities to put money to work. And that's what I did early in the week. I'm going to show you two covered calls I took off the board. If you remember, I had a 3M trade for which I wanted to collect the dividend while I'm holding the shares. Well, I had a March 13 expiration. You could see it right there. When the markets tanked, this $4.40 premium that I received for this covered call, it had come down to about $1.30. And I'm thinking, okay, I'm just going to take that off the board. We're going to pocket that. And we went ahead and pocketed over $850 on the trade. Now I'm sitting back with 3M. 3M then fell, but again, I'm holding 3M. I want to own 3M. I ended up dollar costing, picking up an extra 100 shares during this fall off. So I'm going to be able to write covered calls on 300 shares as we move away from this correction. Okay? I want to put good money to work with great companies. Okay? And for me, that's 3M. I also had a Roku covered call. It was a March 27th, and granted, I had tons of time, and I probably didn't even need to buy this back. I was a little itchy finger, okay? This covered call, it was a 140, and Roku's not trading anywhere near 140 and probably won't by March 27th. I got almost $11 for that covered call. I went ahead and bought that back for $2.40. You could see it right there. Really what I'm looking to do here is buy it back. I got paid $11, buy it back for $2. Keep the difference, and if we got a couple good green days, I would look to write another covered call. Well, of course, we didn't get that. The markets are tanking, and now I'm sitting on my hands with this 100 shares of Roku. But with that said, I'm not afraid to own Roku. Even if it drops another 20 points, we're going to play it, right? That's how I have to look at this, man. It is cup half full, because I can't let this get to my emotions. It will affect me. Okay, so what I need to do, half cup full, have a plan, execute the plan. So in the case of the two covered calls I had on the books, I took them off the board. Granted, I could have let them go to expiration, man. I would have pocketed all of it. But you know me, love being a little more active. And that's probably why I'm not making the max gain like I should be. Now with that said, the markets are tanking on Monday, some 1,000 points. Tuesday, it's down 900 points. So look what I do. We're going to talk about these cash secure puts. Now, first of all, you need to understand, I'm going to be measured, I'm going to be disciplined, and I'm going to be diversified. Okay, if I want to own 400 shares of, say, 3M, right, I am not going to buy all 400 shares on Monday. See, when the Dow was down 1,000 points, I knew this was not going to end anytime soon. So instead of using all of my cash one-time shot, I decided to do it incrementally. I would do 100 shares on Monday, 100 shares on Tuesday, until we got to that diversified 400 shares. Now, with that said, you know how I love using the 3X leveraged ETF for the NASDAQ, the TQs. We get some tremendous volatility, and we get a directional play on the stock markets. When the stock markets are crashing or rallying, if you want a great directional play, find an ETF. Now, if you want hyper volatility, well, you'll use a leveraged ETF like I have. I'm not advising anybody to do this. This is me. I've been doing this for years. So for me, it's about picking my spots, being measured, being diversified. And that's what I did. On Monday, when the TQs fell from 120 down to 96, I was going to use a cash secure put for my first shot. Let me show you that chart right now. So as you can see, as with the entire stock market, these things are pulling back to levels that we had last year. So the markets are going to pull back. They're going to take all those profits off the board. So what we need to do is find our spots, right? So if I believe we're going to rally some 12% down on the Dow, then what I need to do is watch the Dow, but I'm going to play things like TQs, because TQs is a 3X leveraged ETF. I'm not going to use that as an indicator. I'm going to use the Dow, and as the Dow is peeling off, and when it gets to that 12%, that's where I believe we get support. Well, the TQs trading anywhere around 70 is going to be that number. So on Monday, when the markets really sold off, I went ahead, used the money for 100 shares to do my first cash secure put. You could see when it fell from 120, it got down to about 96. I did a 96 at the money cash secure put. I got $13 for it. But here's what I did. Instead of doing a 30-day, I did a June. We're talking 4 months here, because what I want to do is give this sucker time, right? It's crashing here. Maybe we bounce, maybe we don't. But if I give it time, we might rally, and this thing won't finish at 96. It'll finish higher. I'll keep all $13, and we'll move on. So what I did was I took $9,600 and set it to the side for somebody to assign me their TQ shares at 96. Now I gave them 4 months to do that. They paid me $13 in premium, or $1,300. So do the math on that. I set aside $9,600. They gave me $1,300. So if I'm going to do my cash secured puts, right? If I'm going to put my money to the side in a stock market that is bottoming out, that's how I feel, I better get paid. Now, feeling that the markets are going to sell off some more. I mean, yeah, I would have loved it if it had bounced and head higher, but it didn't. So the TQs over the next couple days gets down to about 70. So here I am. I'm going to be measured. I'm going to be disciplined. I went ahead and wrote another cash secured put at 70. And they paid me the same $13. So again, I set aside $7,000. They paid me 13 points. That's $1,300. And it's the same June expiration. So now do the math. That's 18% for me to set aside $7,000. I got paid $1,300. And with leveraged ETFs not having dividends or earnings, chances are this will go to expiration, right? There'll be nobody early exercising. And with it trading at 70, and my thinking is anywhere between 70 and 60, we're going to rally. Well, the downside risk is not there. The downside risk is less. I'm going to go ahead and do this now, and we'll see what happens. I believe we have sold off near that support, and Wall Street's going to move them higher. Now, I do have time, right? I have time. So as the markets trade sideways to higher, I'm hoping, right? What I'm hoping is this $13 premium will fall to $7, $6, $5. We get all the way down to $1. I can buy that back. Right? I got paid $13. I pay back $1 to alleviate the obligation, to release that cash back to me, and I pocket the difference. So as you can see, the cash secure put is one of those trades that's going to have high implied volatility, right? These markets do not just sell off. They sell off hard. And when they're selling off, those put premiums are going to be jacked up, and you're going to be able to get some serious premiums. Hell, Apple, Adobe, they were all down some 20 and 25 points. You could have written cash secure puts collecting almost $14 and $15 premiums for just 45 days. I mean, when the markets sell off these days, they sell off. So find your spots, be measured, be disciplined, and then act. See, these are opportunities, right? These are opportunities for success. We're going to use our experience. We're going to use our skill. We're going to use that to profit, okay? This is what happens in today's world. They run them up to sell them off to run them up again. Now, let me go ahead and show you real quick what I'm thinking when I'm going to buy a great stock in this falling stock market. Now, many of you may know I bought after its last earnings. The stock had fell off tremendously. To me, there was tons of value there. I mean, we're talking HD, Home Depot, right? So when it peeled off, I used that as an opportunity to buy some shares. And when HD was trading back here, I went ahead and bought 100 shares. Now, I was going to write a covered call immediately and try to make that 3% that we love doing. Well, it didn't work out that way, and HD sold off just a little bit. Well, it caught a little bit of wind underneath its sails and got higher. I was able to then, when the stock was trading, I think at about 221, I was able to write a 230 covered call, and I ended up profiting quite a bit. On those 100 shares, I was able to profit some $1,700. Now, why am I showing you HD right here, right now? Because right now, we can buy great stocks at a discount. Okay, again, I want you to be measured. If you want to own 300 shares of HD right now, I want you to think about maybe buying half of it, sitting back, seeing where the markets go, and then buying the other half. The way I see it is this. If I do it that way, if I miss, because we never predict the bottoms, right? If I miss and it continues to fall, I can then dollar cost average with that second bit of money, so I now dollar cost. Now, if the stock rallies, at least I got skin in the game, right? I bought half of what I wanted. So I think it's a win-win. So in the case of HD, if I wanted to own it back here at 217, well, look where it's at now. It has found itself right back to where I wanted to buy it back then. So I'm looking at HD right now as a great opportunity. Well, look, I don't want to jump into this because what I need to do is reverse engineer where we're at right now. I've mentioned this on some blogs and on Facebook, that what you want to do is reverse engineer where we're at. Think about HD right now and how HD is affected by the virus and the business of the virus. Right? It's not just go out and buy this thing because it's down from 240, 250 down to 217 and it might be a good buy. Granted, if you own the shares and you want a dollar cost, of course, but I think of it like this. HD has to fill their shelves with product. Well, if the supply chains around the globe are being affected, they're not going to be able to fill their shelves with all that product. And their costs might be higher. So how is HD affected? Well, their customers also might not be going out and mingling in the stores, right? There's a lot of things that you have to think about. You just can't look at the stock falling from 250 to 217 and just jump in. Remember, that's what I did with all the oil companies, right? It did not dawn on me that when oil fell from 100 to 25 a barrel, that the stocks would fall. What they sold fell some 75%, but I did not connect the dots that their stock prices would fall 75%. So I always reverse engineer the thinking. So when you think about putting good money to work in this stock market right now, what I want you to do is think about how the global economics of the virus, how it affects the stock. I'll give you one example. I talk to Jerry all the time about Win. He still is in Win. I'm not in Win right now. Well, we talked about how Win might be affected over the next 3 and 4 months where they have limited people going to their casinos. And I talked to Jerry. I'm like, Jerry, the stock is going to fall. This might not be the best time to be buying or holding Win. So reverse engineering, I don't look at Win as being cheap. I look at it from a standpoint of I'm going to be measured, disciplined, and diversified, and I'm going to think about how the virus affects its business. So I'm going to leave it right there. Now look, I'm going to be doing more and more about cash secure puts, covered calls with married puts, and how we can protect ourselves in a down market. For some of you that have entered the game and you haven't really experienced this, well, you're going to learn a lot because over the next couple weeks, we're going to be laser focused on using volatility to the downside, to the upside, and how we can protect ourselves with married puts. And I know a lot of people are interested in that. They want me to do videos on that. We're going to do it. And hey, if you're retired out there, right, and you're generating your income using selling premium, you're a little worried too. Well, we're going to continue the discussion about how you can get better at this, get more experience, and quite frankly, handle these moments of uncertainty. Wall Street has uncertainty right now, and you see what they're doing. When we have uncertainty, we need a plan. We need to execute the plan. Now, look, what I want you to do is subscribe to the channel if you're not subscribed. Bang the like button, ring the bell so you know when I do my next red hot covered call. And I'll tell you, I'm going to release a brand new podcast this week. We're going to talk more about market volatility and how you can profit from it like I have over the past 3 years. Hey, look. Go over to Facebook. I want you to search CTP Dashboard. Join the conversations. I've been posting up there quite a bit. Till next time, may all your covered calls be profitable.